Good morning, everyone, and thank you very much for joining me. This is the DAX Open. My name is Russell Shaw, Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Today being Wednesday, the 24th of November, 2021. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. And here's our market commentaries disclaimer. And just finally, here's our references. So what we'll do today is we'll take a look at the DAX first, and then I'll take a look at Bitcoin after that. Excuse me. Let's just bring up the chart of the DAX, and before we go through how it looks for today, I'll just go through the Cnbc morning note, which reads as follows. European stocks are expected to open around the flat line, and this as investors monitor the latest data out of the Eurozone and the region's latest COVID surge. European markets continue to monitor the acute COVID crisis in the region this week, with more countries considering stricter COVID restrictions and partial lockdowns to curb rising infections. Germany is expected to make a decision on stricter measures today amid a surge in cases there, and France recorded more than 30,000 new daily infections on Tuesday for the first time since August. Investors also digesting the latest business activity data from the region. European stocks retreated on Tuesday, closing lower despite data showing that Eurozone business activity grew unexpectedly in November. IHS's Market Flash Composite Purchasing Managers Index, a useful gauge of economic health, climbed to 55.8 from 54.2 over the last month, greatly outstripping expectations of 53.2. However, optimism about the immediate future for economic activity declined. It came amid a fresh wave of COVID-19 infections across the region and surging prices, and the outlook has deteriorated for December. Elsewhere overnight, US stock futures were little changed after tech shares sold off for a second day in a row, pressured by rising rates that gave a boost to energy and financial stocks. Meanwhile, shares in Asia Pacific were mixed in Wednesday's trade, with Japanese stocks leading losses regionally. Earnings came from Virgin Money and United Utilities. I beg your pardon. Earnings to come are from Virgin Money, United Utilities, Johnson Matthey, and data releases include the latest IFO Business Climate Survey from Germany. All right. Let's take a look at the price action. So this is very similar to what we said yesterday. I don't see any reason that we need to alter the hypothesis, in that we are in a correction for an uptrend. So we've got these all-time highs. All-time highs generally bullish, okay? But we know that prices can't move in a straight line, so we're now monitoring this as a pullback. And one of the ways that we will monitor this is using our reference candle criteria. So if this week's candle turns out to be the candle that's got the lowest low over 3 candles, then we'll use that as the reference, and then we'll need to see price close above the reference candle's high. Now, this might not be the reference candle. We might have another lower week next week and another lower week the week after. But the way that we're treating this current movement is, of course, a pullback within the uptrend. And you can see that we've got the label HT question mark, higher trough question mark, because a trend has a definition, and that definition is a higher trough followed by a higher peak. Okay, so at the moment, this looks just par for the course. Let's take a look at the daily. Okay, so we've dropped out of our area of strength. So you can see here's where the last swing took place. So we dropped into our neutral area. To me, that's still very much a part of a pullback on the primary trend basis. And now the daily will give us sort of extra granularity to see if that is correct. Yesterday's candle so far looks like it could potentially be the reference candle. We drew this aqua horizontal yesterday, and we want to see if we get price to close above it. Now, if price falls into our zone 3 and moves down, well, then we're still correcting. We're still correcting. So this is going to give us a map to see where this correction ultimately goes. Something that we mentioned yesterday, and it's worth mentioning again, in that the higher trough needs to be followed by a higher peak in order for the uptrend to continue. It's not going to be an uptrend if it actually charts something like that. So if it becomes a lower peak and moves down into a lower trough, well, that's actually the opposite of expectations, and we'll have to address that if that's the way the price actually charts. However, just to reiterate, we're at all-time highs. It's very difficult to call for a bearish case when we're at all-time highs, especially because there is a lack of any irrational exuberance. Now, I guess the one way that this may turn out to be a top is, of course, if economic activity does falter to a point that is greater than expected. Again, sort of recognize the situation in terms of the COVID outbreak in Europe. However, I am of the opinion, and it's just an opinion, but I am of the opinion we've been there before, and you know, we've adapted, and we will come out of this wave as well. So we'll just watch to see how the chart unfolds. So we've got this correction here at all-time highs. We are at zone 2, which is effectively a neutral area. How's the hourly looking? So we've got to go down to the hourly, and what we're looking for on the hourly is effectively the timing, the triggers, right? And yesterday, between these ellipses, we had the stochastic actually turn up out of the 20. In other words, it didn't spend too much time in the lower quintile. Well, that's good, because the longer it stays in the lower quintile, the greater the bearish pressure. So we went in, and now it's moved out. The EMAs never gave us any entry. Okay, so the two triggers didn't line up yesterday. The question is, of course, will they line up today? So we have got the EMAs that are looking to cross bullishly. They need to show more angle and separation there. That would be trigger 1. And we need to get the stochastic to cross positively. If that takes place, it still is no, it's no, the probabilities, I would suggest, haven't shifted all that much. But when the stochastic makes its way through to the 80 level, and if we hang around the 80 level, well, that is the shift in probability, because that is the momentum now starting to show itself. If we just go down to this area here, let's see what we can do with some pullbacks. So we're kind of at a, we've pulled back to a 50% over here. So perhaps we're going to get 1, 2, 2, 3, and perhaps we're on the next impulse. Perhaps. It really depends on the momentum cooperating with that type of analysis. So we'll just keep an eye on that. If there's no triggers, well, then there's no triggers. The fact that the daily chart is in a neutral area is really sort of the overwhelming influence on price action. If there is a cross, well, just to reiterate, it's not going to do us any good unless the momentum builds, and that's where we want the stochastic to show the momentum build. So we'll keep an eye on that. So the crosses and then the momentum build. All right, any questions around that? Go ahead, type those in. I'm going to bring up Bitcoin in a moment. Let's just see. Hey, Al, good morning to you. So what I'm going to do is I'll just wait another sort of 15 seconds. Any questions around the DAX here? Go ahead and type those in. I'll just reiterate all-time highs. We don't move in a straight line. This looks like a normal correction to me in terms of price action. We're not in the bearish area on the daily, but we're monitoring. We're in zone 2. And then the timing now all depends on market cooperation. Triggers plus momentum. All right, I'm going to just bring up Bitcoin here, and we'll take a look at Bitcoin. And we're doing that because it's a Wednesday. So because I don't have the crypto minute on today, I'm just adding the Bitcoin into this webinar here. Let me just bring in Bitcoin. Let's take that out. All right, we'll start with the weekly. So another top-down analysis. And what is happening here? Let's just focus on the price action from the 17th of July. Okay, so just keep an eye on the 17th of July. And so this leg from the 17th of July is an uptrend. Okay, you've got a reference trough, you've got your reference peak. Here's the higher trough, here's the higher peak. That's the definition of a uptrend. Okay, so now we have hit this 64,000 level over here. This is a resistance. It looks to be a strong resistance level. The last time we were here, sort of referencing this point, we had a vicious pullback, and the question, of course, are we going to get the vicious pullback this time? So in the technical analysis of Bitcoin, and we've said this before, the March-April high here, I think, was very much a symptom of an irrationality in terms of market commitment. How do I say that? Well, we've got to bring in some indicators here. So we'll bring in the RSI. And I'm going to bring in the stochastic, which will help us as well. Okay, so this, I think, was actually setting itself up for a huge pullback. And the reason I think that is, of course, because the RSI, which is that's the indicator that we use to measure excess. Okay, we don't use the stochastic to measure excess because mathematically you can't, but the RSI you can. And we were overbought for 6 months. Now that is very unusual. Okay, for the RSI to stay at an excess is noteworthy when it stays in excess for 6 months, because it's telling you there's something irrational going on. It's telling you that there's something abnormal going on. What I would attribute that to is market emotion, whereas market participants have some sort of gold fever type of affliction, and they pile into Bitcoin. But the point is, because there's a huge energy buildup here, eventually when the last buyer is sucked in, because of all of this emotional energy that sort of has charged this move, it's got to dissipate. And it dissipated extremely rapidly, and it was a vicious pullback. So if I draw in a Fibonacci here, and I just want to show you exactly what I'm doing here. If I right click here, this is a logarithmic scale. It's not arithmetic. A logarithmic scale is my preference, because just to give you an idea of what a logarithmic scale is, if you have an instrument at $1 and it moves to $2, well, that's a 100% movement. If you've got something at $10 and it moves to $11, well, it's still moved that $1, right? So 1 to 2 is $1, 10 to 11 is $1, but the 1 to 2 is 100%. The 10 to 11 is just 10% movement. That's important, and that's what's reflected in a logarithmic chart. So I prefer that, and it's especially important to use a logarithmic when you're looking at longer-term time frames. So what happens here is you've got this. So it doesn't look like you've got this vicious pullback, but this is an incredibly devastating pullback. We go all the way up to around about 64,000 here, and we pull back to about 30,000. You can see that we pull back over 50% over here. That's devastating, especially for anybody that got involved at the top. But if you take a look at the current situation, it doesn't look to me as if we've got that emotional attachment to the current move since the July leg started. It looks much more ordered, much more orderly. So to me, the likelihood of such a severe pullback is much more remote. It's not to say it can't happen, it certainly can happen. I think there is still a large emotional attachment to cryptos. But the truth of the matter is they are gaining wider acceptance. And that seems to be almost accelerating. So I don't think the irrationality that we saw in March is currently there. And that now brings us through to the stochastic, which is to measure, well, what's happening with the current market momentum. And the stochastic to me is certainly my favorite indicator. And the reason is it gives me a fairly good idea of just how strong momentum is, and I'll explain that in a moment. So yes, we had a huge momentum up for this leg here, but we also had an irrationality that was attached to that momentum. We've got a really good momentum here in this leg, but it doesn't have the irrationality attached to it. At least that is my assessment. Now, again, I want to reiterate, it doesn't mean we can't have a sell-off. We certainly can. It's just the indicators to me seem a lot more normal as opposed to abnormal. And the idea here is, of course, well, we've hit this resistance area. This resistance area is clearly an influence. However, just like we're looking for a higher trough on the DAX, Well, we're looking for a higher trough on Bitcoin as well, okay? But we don't know if we're going to get it, okay? So we get a higher trough question mark. If there is a sharp sell-off and it takes out this here, then we don't have a higher trough. Then we've got a lower trough. That changes the whole structure of the analysis. However, this looks to me after a leg of 1, 2, 3, 4, 5, 6, 7 weeks up. Well, we're only 2 weeks down, right? So it just seems to me in the realms of normal reaction. Prices don't move in that straight line. Of course, there would be a narrative that is associated with any pullback, and the pullback in cryptos would be no different. But to me, on a sort of a bird's eye view, this looks quite normal. Now we go down to our daily chart. This is where we've got to be quite savvy, because there is an ambiguity between the weekly and the daily, which we didn't see in the DAX. The DAX was in neutral. The Bitcoin is in our bearish area. So I would be a lot more comfortable when we move out of this weak area, which is the lower blue to the lower red. I'd be much more comfortable when we come here, because when we get back into there, well, that potentially gives us the higher trough that we're looking for. So it looks to me that we are caught in the midst of a correction in the DAX. It looks to me that we're in the midst of a correction in Bitcoin. And now we have to see if the triggers play out. Okay. And even if the triggers play out, well, that's not really the battle in terms of the probability shift. The battle is getting into the 80 level and holding. Okay, so once we get into the 80 level and we start holding, well, that's when things start to happen. Okay, so this is a good example here. Okay. There's your swing. Okay, kind of caught in no man's land. What does that mean for us? That means be disciplined. Okay, don't expose yourself until everything has lined up so that the probabilities favor you. So just be aware of that. All right. Any questions around this analysis? Please go ahead and type those in. Okay, so nothing coming through. We'll conclude here. Please email me if you need to get hold of me. I'm still doing a lot of articles for the website, which is occupying a tremendous amount of my time. But I do invite you to email me if you need to. So please, that's an open invitation. Let's conclude at this point, and then I look forward to speaking with you again. Thanks very much, guys.